Hello and welcome to yet another powerful Ask Me Anything session. And this will be exclusive session where you will be able to ask me any questions related to investing in terms of your process, in terms of your strategy, how to think about fundamentals, how to think about technicals and broader markets also. So let's get started. Let's begin this session by taking few of the questions. If you have any questions for this session, please type in the comment box and let's get started. Okay, so I'll wait for the question to appear in the queue and we will begin the session now. Awesome. So first question we are getting is from Jagjit. Jagjit is asking, when we are doing fundamental analysis or we want to select a company for our long-term investing, what are the parameters we should be looking for? And let me tell you, I covered this topic very deep dive in our hackathon implementation program. This topic is actually very close to my heart. Okay, and there are actually, if you think about it, it's very simple in terms of what you need to focus on when it comes to long-term investing. There are three main parameters which we need to look for. First is growth, right? If the company is not growing, then it's a big problem. Okay, so you need to find a company which is in first place growing. Now, just growth is not enough. Any donkey can grow, any donkey can run, but whether that growth is profitable, whether you are making reasonable return on capital employed for that particular growth. So you can very well grow your earnings by just putting your money at 2%, 3%, and you might get so many such opportunities, but your bank FD rate might be just 8%. So it will not make logical sense to get 2% return on investment or 3% return on investment just to grow yourself. Okay. So second is return on capital employed. And third is how much you are able to reinvest year after year with a high return on capital employed, which is called return on incremental capital, which you are putting, which is also called ROIC. Okay. So to keep it very short, three main parameters you should be focusing on. One is earnings growth, the second is your ROCs, and third, how much you can reinvest during the time period of the company. And of course, there is a detailed framework to it, which I call machine formula. If you have read my book, you might be knowing in my book, You Can Compound, I've covered this entire formula, how you can go about this. And in fact, in our community also, we have this framework, which is over there. Okay. Now let's take the second question. Thank you so much again for asking. So Lalit is asking, as somebody has said, buy in rumor and sell on news, can you please enlighten this quote for retailers? It's very simple. In fact, the entire Technofunda foundation has been laid on this one principle, and we don't even wait for rumors. So I'll tell you what happens generally in the market. Most of the times, before you see the news on TV or you see the announcement on the exchange, there are a lot of other people who will be privy to that information, right? Say for example, promoter will know that they are putting up a new plant or they are launching a new product, they are doing something exciting inside the company. The managers of the company will know, the employees of the company will know, a lot of distributors of the company will know. People who are surrounding that company, living near that company will know that there is some plant coming up or there is some project going on. So the point is, even before the announcement is made, a lot of these people already know bits and pieces of these information and they start acting around it. And not only they, but they also spread the words and they socially connect with other members and their relatives will get to know and their circle will get to know. So even before the news comes in, these rumors will start spreading and a lot of people starts buying, in the shares. And that is where, it is called that buy in rumor and sell on news, because these are the one who actually get in slightly early and they create some impact. I'll give you one example, very recent example which I saw. I'll just give you example of a company called Solar Industries. Okay. Now, how does one know that people are acting on rumor or there is something already going on? Is very simple, by spike in the volume and spike in the price, which is called price volume action. So you can see here the volume is much higher than whatever volume was over here. For last many days there was not much of volume, but suddenly something happened on 4th March that slowly the volume started picking up and the company share price also started picking up. And from almost 6,800 it started going up and it went all the way around to 8,000 rupees. And then actually the news came in that there is some order which they got, I think, from Coal India, and that is the reason the company was actually in the excitement mode. And then you can see last day there was a profit booking that started happening. So the point is, even before something will come out in the press release, a lot of people inside their group will have that kind of idea, outlook in terms of what is going on over there. Okay. So thank you so much again for asking that question. So let me take the next question from Mohit Sachdeva. Mohit Sachdeva is saying how you select Colgate kind of companies as sales profit growth in 3, 5, 10 years is less than 10. Okay. So this is a very, very good question. So again, I posted on Twitter like a quiz that, okay, this company which is stagnant and there is something happening here, what is this name of the company? Okay, so this was actually like a quiz which we did, and the reason why I did this was to again give you a perspective what market thinks and how market behaves. Okay, so again, don't treat it like a advice, it is just an example how to think. You can think about this for many such companies. So first of all, Colgate kind of company, we call it mango kind of company. Now what is mango companies? Mango companies are the ones which has incrementally, no growth coming in, but the return on capital employed, whatever capital they have put, it is amazing. Okay, so it's like, the old hero. Okay, it's like 1980s Amitabh Bachchan. Okay, where he was putting energy and it was coming out. Now imagine that same Amitabh Bachchan suddenly starts getting contract of Kaun Banega Crorepati. So you will start thinking that, boss, for 20 years there was not much of movie coming from Amitabh Bachchan, and now suddenly he has got something new which is changing the entire outlook. So I'll just show you from that same perspective how to think about this company. So if you see, first of all, the growth of the company, as you rightly mentioned, for last 10 years, the sales growth was not much. It was just 5%. The profit growth was not much, just 8% compounded. And hence the stock price also did not move much. But something which was incredible was return ratios. So whatever money this company invested, it is minting crazy money out of it. To keep it in perspective, if you see, this company has a fixed asset of roughly around 1000 crores. Okay, roughly around 1000 crores fixed assets are there, which means they had invested in their total assets, which is roughly around 1000 crores, and see their profitability. Every year they are churning some 800 to 1000 crores. Imagine you bought a flat. You bought a flat for 2 crore rupees. And it is giving you rent of 2 crore rupees every single year. This is what is happening with this company. So insanely profitable. Why it is insanely profitable? Because it is buying commodities. The raw material is very cheap. There is nothing rocket science in what toothpaste you make. But what they are selling is brands. Okay, so 5 rupees worth of thing they are probably selling for almost, maybe 50, 60 rupees. And if you want to know how much is the gross margin which they are making, you simply go here and you will be amazed that they are selling the product at 70% gross margin. So if the Colgate is 100 rupees worth, 30 rupees is the cost of the raw materials. The 70 rupees is all their gross margin. Are you getting it? Now, why I told that there is something changing inside the company, it looks like, is because if you see the last year, the growth has started coming in. So this company which was not growing, suddenly they are improving on their margins, and suddenly if you see the growth has also started coming in. Okay, so from roughly 1000 crore profit, they have now started to make approximately 1700, no, sorry, I think I'm on a wrong line item. So almost 800 to 1000 crore profit. Now they are making 1260 crores of profit, which means something is changing. Now, what is changing? You need to check whether they are doing more premiumization, they are doing more of margin expansion, they are selling more because people are brushing their tooth 2 times a day, whatever could be the reason. And if you want to get a perspective, what has happened is this company has almost double in last 1 year. Okay, and that is where I call this transition from mango to banyan. So mango is a company which was not growing but will give you dividend every single year. It's stable, high profitability, just like mango tree giving you amazing mangoes every single year in summer. But then it is not growing further. The tree is stagnant. But banyan, it keeps growing. And that is what it looks like, that the growth is probably coming in. Again, not a recommendation. You should do your research and try to figure it out. But this is where, sometimes the opportunities come in when you figure out a company which was not growing and starts growing like crazy. Okay, at least the initial green shoots are there. Of course, the probability could be lower, but when you have got something which is a very stable business in FMCG with 3 to 4 competitors, HUL which has Close-Up and Pepsodent Band which are not very aggressive in terms of their portfolio, and Colgate is only focused mainly on the tooth related products, you might see some good opportunities. Yes, if this was clear, just type clear in the comment box and hit a thumbs up if you like the overall analysis. Okay, this is how you should think whenever you want to find new opportunities, when there could be a potential growth inside a company. Okay, so let me go next in terms of questions. All right, so there is a person, I don't know whether it is your right name or a wrong name. The person name is Sach Bolo. Okay, so I'll tell you the truth, and he's asking, entry to sabko pata hai, how to exit ye batao, right? And this is a very, very good point. Okay, because to put money is very easy. Okay, you can buy anytime anything, it's very, very simple. But exit is where the real challenge is. And if you just follow fundamental analysis, there is no way you will have an objective way of exiting. Okay, so there is only way, if you want to literally have a proper exit in place, is to learn technical analysis. Okay, and you need to blend your fundamental analysis along with technical analysis to take that kind of call. And I generally do a detailed session for your entire buy and sell system building in my hackathon. But if you want to get an overview of how this is done, you can connect on this session which I have shared the link. You can be live. It's like a detailed session. It's a free session where you will be getting the entire perspective in terms of how this is done. Okay, so I'm sharing the link also inside this comment section, and also you can just note it down, technofunda.co/webinar, because it's a very detailed topic. But yes, to answer it in a very short manner, you need to blend technicals if you want to master this particular art. Okay. Superb. So let me take the next question. Deep Das questions. Okay, can you elaborate on some microcap or multibagger companies, how to identify them at an early stage and how somebody can filter in the screen? Very, very important question. Now, first, very important thing, you don't need to always find it too early. Even if you are slightly late, but you ride the entire trend, you can still make a lot of money. Okay, the starting point usually is twofold. Okay, when a company is emerging, there are two things which will happen. generally the companies which make these kind of multi-bagger returns will have very good sector tailwinds. Okay, so they will have a tailwind where the entire sector is helping them. So say for example, in last decade there was a chemical sector tailwind that happened, and lot of these companies like Aarti Industries, you had Vinati Organics, you had you know Aarti Pharma, a lot of these chemical companies actually created a lot of wealth. Then you also had last decade agrochemical industry tailwind, where a lot of companies like PI industry made a lot of money. Okay, and if you see last 2 years, there was tailwind in two sectors, which was railways. You had defense, and you had lot of capex related companies like in power sector capex and so on and so forth. And there was also renewable energy. So I've actually we have videos on all these sectors which we have put in. So if you search Vivek Mashrani railways, you will find railway related video, and which I've done in 2022, guys, which was very early phase at that point of time, and I'll show you on the charts also how it panned out after that. Same way, last year I did a detailed video on renewable energy, that how renewable energy is going. 2022, again I spotted defense sector, that something is really moving in defense sector. And 2022, you can search defense sector Vivek Mashrani, and while very initial phase these companies were moving, we were able to spot it. So why we were able to spot it is because there is a tool which I use. It is called Ride Winners. Okay, and Ride Winners actually gives me the movement across the sector. Okay, that what is the change that is happening inside a sector. I'll just show you so that you get a perspective. Just give me 1 second, please. I just need to figure out, yes, screen sharing. So this is the tool which I use, and you can see like it is categorized by these colors. So basically from 0 to 100 it is categorized, and each and every company is divided across the subsector. So this 26 is number of companies in that subsector. So what happens is, say for example, any sector starts showing some kind of traction. This goes from 0 to 100, which means number of companies out of 26, it's in the percentage that, okay, 23% of companies are showing some bounce, 30% of some companies are showing some bounce, 14% of companies are showing some bounce, so on and so forth. And that way, as I was able to spot railways coming in my screen. That is the first part. The second part is when these kind of companies start coming in screen. So say for example, that time RVNL came in my screen. You will see a massive something called as price volume action, where your price will be rising very fast along with the volume. So you can see over here, this is the spot. Okay, so the price is also rising along with the volume. And if you open the daily chart, you will see like crazy. Okay, let me go to 2022 and see a lot of these pictures and diagrams already are done. So that time also we analyzed this, and now you should be able to spot it very, very clearly. Okay, let me see if all the scale and everything is there. So are you able to spot the spike in the volume and spike in the price? These are the signs that not only the sector is moving, but your company is also showing traction. And many times not just one company, multiple companies in that sector will start moving in. So say IRFC also started moving in almost around the same time frame. Okay, so can you see October 22, same time period, this also started moving up. If you see Titagar Wagon, which is again into railways, you will see same period again, Titagar Wagon also started moving up. Okay, in 2022, middle of the 2020 year. So this is where the opportunities lie. Even here it started showing price volume action. And if you see the kind of wealth creation it does, right? If you want to see the kind of wealth creation it does, this is where we were able to spot this. So you can see from almost 100 rupees, it has created 8 bagger returns. And that is what I was saying. You don't need to be earliest, but if you are able to even enter slightly late and ride this entire phase, you can actually make a lot of money. And that is what we do. Like in our exit system, we use an indicator called Shaktiman, and you can see on weekly indicator, this entire zone, it remained green. Only here we got an exit that, okay, now the profit booking time is there, but this entire phase, it was in green. Okay, so you need to basically keep riding during that phase. So are you clear, Mr. Das, how to basically spot multi-baggers and what should be the thought process when you are finding the multi-bagger? So Deepdas, that is the answer, big answer to your short question. Yes, thank you so much. Yeah, so Lalit is asking, Vivek sir, as it is now very evident that Modi 3.0 is happening with Abki Bar 400 par, which sector should we invest in aggressively before FII, DIR that will focus of this government 5 years? So I think the focus of the government is truly infrastructure, right? And that should be the job of government. If you see last few years also, these sectors have already started moving. It is not that they are not moving. So one of the example was railways, which I showed you. The second is defense. And if you want to know more about this in detail, please feel free to browse through my channel. Okay. There are a lot of videos real time we have created when things were happening. So one, there is a push in terms of defense, Atmanirbhar defense theme. The second one is railways. The third one is of course renewable energy. Again, I've done a detailed analysis on this channel. Just type renewable energy or green energy plus Vivek Mashrani, you will find this video. And another thing what they are doing is more like an import substitution, right? So China plus one theme is also still playing out. Although chemical and pharma, there are some tailwinds which has gone, but a lot of other sector this is playing up, and there is a detailed video on that also. You just do China plus one Vivek Mashrani, you should be able to find that as well. So renewable, your infrastructure related companies, capex related companies, your power related companies, right, that will really do well. And of course defense and railways have moved quite a lot, but still, you know, if they do with the pace at which they are doing right now, you might see a lot of traction after that also. Yes, Lalit. So thank you so much, Lalit, again on asking this question. And guys, if you are watching this from elsewhere, like if you are watching from Facebook or you are watching from Twitter, we are live across multiple platforms. But if you want to ask questions, you can go to YouTube on my channel and you can ask questions so that, you know, I can answer your questions and I can see it in my comment box. Let's go next, Noman Sayed. Okay, Noman Sayed is saying, how do I get Shaktiman indicator? So the indicator which I showed you is a proprietary indicator which I've built and coded, and this actually, you know, I give based on invite only to premium members of our community. So if you are part of our community and you are a premium member, you can claim this indicator and we will add it to you. But it is not for a general audience because you need a lot of hand holding in terms of how to use this properly, how to use this efficiently. Yes. Awesome. Thank you so much, Noman Sayed, for asking this question. Let me see the next question. Amit Shinoy, he's asking, do you think it's a great idea to invest in mid-cap companies as they still have steam left as compared to large cap? Micro caps and can still remain risky. So see, you have to look at pockets. Okay, you have to see within mid caps what are the pockets of undervaluation or where there is some steam still left. Same way, for small cap and micro cap. Of course, relatively small caps based on the volatility and the size of the company are the riskiest one. If it works, it will give you great returns. If it doesn't work, it will not give you much returns. So it's high risk, high reward, then followed by mid cap, and then large caps are generally less volatile because they are sizably big company, more formalized, more corporatized management, and that is where you see slightly lesser volatility there, right? But if you want to invest, I think you should ideally have a diversified portfolio, right? So what I do is, in my portfolio there will be some portion of large cap, some portion of mid cap, and some portion of small cap. I don't do SME, okay, because it's too risky and too illiquid for the kind of money I put. but you can actually have a mix of all three of them. Having said that, in terms of current market situation, if I see my indicator, you will get to know how does it look like. Okay, so what I do personally is I want to invest when there is a good trend. So every single week what I do is I just check the trend over here of all the three indices. So if I want to see CNX Midcap, it will show me whether the strength is there or not. So if you see the entire period starting April 2023, I had a very strong trend for almost 4 to 5 months. So I was riding in this entire phase predominantly into mid cap. Then there was some bit of choking up, and you can see how early the exit signal got triggered here. This particular phase for few weeks I was not very active in mid cap space. Then again it showed that the trend is picking up, and this entire phase for last 3 months actually the trend was there. But now if you see, it has started turning red. So I'll just zoom it a bit so that all of you can see it. So now if you see, it is starting to turn red. So I'm not very bullish on mid cap based on my analysis and my system which I've built. Same way if you do CNX small cap, it is even more riskier, as you rightly said, because there the choppiness and the volatility has been even more higher, and you can see here also it has turned red. So ideally I would wait for the trend to turn back, because I generally am a trend follower in terms of my investing style, and once it starts turning back, I'll be more aggressive in the small and mid cap space. So right now for my satellite portfolio, I'm predominantly in cash, majorly it is in cash. My core portfolio, I'm still riding it, and there is an entire video again in terms of what is core portfolio, what is not core portfolio. I've created a separate video, so you can do how to beat Nifty returns plus Vivek Mashrani. You will find that video. Okay, so just check it out on the channel itself. You will find that entire detailed video. Okay, awesome. Thank you so much, Amit. Hope I was able to answer your question, and a lot of you might have got that perspective also. So Sumit Sinha is saying how to control our emotions while the market is crashing. See, you have to find the underlying reason why you yourself are shaking up when the market is crashing. Of course, it is natural to get fearful, but it happens due to many reasons. First, it could be you are over allocated into equity. You have all your money into equity instead of diversified across asset classes. That might result into a lot of anxiety. Second, your expectation might be wrong from equity. You might have thought equity will only go up, and then suddenly it starts going down, and you feel that it is not working in my favor. The third is within your equity portfolio itself, you are too much concentrated. Say you have all your money into small cap or mid cap or large cap, and suddenly when that starts falling down, you might be facing fear. Fourth thing could be you don't have a system, and which is a major problem I see across many people, that they don't have any decision point in terms of when they will buy, when they will add, and when they will sell. Okay, so they don't have a buy, add, sell system, and that is where I do this special workshop in terms of explaining how to build system for yourself. And this is what I would recommend to each one of you, that if you don't have a clear system in terms of buying, adding, selling, you need to definitely have one. Okay, because once you have clarity that okay, if it comes to this point, like say I showed you mid cap and small cap, that okay, if it becomes red, I'll reduce my exposure to small and mid cap. If it is green, I'll keep riding it. So now I have mental peace. I don't need to worry about what will happen, when it will happen. As soon as it happens, I take a decision. Are you getting me? So you should have any system which helps you to take a proper decision in terms of buying, in terms of adding, in terms of selling. If you don't have that, that also can create a problem. Okay, and if you want to know more, on my website, if you go to vivekmashrani.com, I've created a podcast which says what to do in this kind of volatile market, or when market is bleeding, when market is crashing. What are the 7 ways in which you can actually avoid that? So I would highly recommend you to even watch or listen to my podcast. Go to my website vivekmashrani.com, and I am sure you will find that podcast very amazing. Okay, So thank you so much, Sumit, for asking that question, and it was a great question. Uh, Let me take another question from Mr. Vinod Nasari. Vivek sir, I have doubt. If you can get my question, in present market volatile scenario, if one earns good profit, say 20%, can we opt to encash profit as we need to take money sometimes? Absolutely yes, right? So particularly in satellite, if your exits are naturally triggering because of your exit system, you should definitely keep it in cash and you should book some profits. Another reason to even book losses, if you are running losses and your losses are getting bigger, is because you are in the month of March and you can do tax loss harvesting. So you can sell your, even loss making situations and net it off with gains which you might have in your portfolio and also save on tax. So both ways it is actually important, and it is very, very right way to go about it. But if you are following our system, naturally, some of your positions will start turning into cash. Okay. Awesome. Thank you so much for asking that question, Mr. Vinod. Great question. Uh, yes. So Amit Shinoy, Vivek sir, thanks for a lovely explanation. Can you kindly advise that do you take cash calls depending upon the trends? Yeah. So we have individual exits, right? So I'll just give you an example. How for a long term and for a short term I have historically taken a cash call. Again, treat it like a example. It might not be for you if you are following a different system, but just to show you how I have taken cash calls. So say for example in BSE, right? So BSE, this is where the entry got triggered in our Shaktiman based on the indicator, and from here till this point there was no exit which was triggering. Okay, so kept on riding this entire trend, and this is where the exit got triggered. So you can see here from ABC, which is in green, it became Z, which is in red. Okay, so this is where automatically the entire position will get turned into cash. This is an example of a satellite kind of situation where we are following weekly charts, and by the way this was almost 574 to 2300, so it was almost like a 3-bagger within a year. Okay, now for long term position, again this position I had, now I'm not holding, a company called as Page Industry. All of you might be knowing company called Page, which is into jockey underwears. Now this company, it started turning into good trend just after COVID sometime, and it started its uptrend. So this is where around 23,000 it started picking momentum and it started going higher and higher. Finally, in this month, like month of I think December 2022, somewhere between December and January, around 44,000 or 43,000, it triggered the exit. Now you can see again it became red. Now I'm not following a daily chart or a weekly chart where every week I need to see or every day I need to see, because this is a long term good solid fundamental company. I am looking at a monthly chart. So here it triggered the exit, and despite being a fundamentally very strong company, because the growth is not coming, it is not moved for more than 1 year now, and peacefully I was able to get out and take a cash call in this position. So one, you can take a cash call in your satellite portfolio based on market condition, but in core portfolio also we take a cash call based on situations like this. Okay, so this is how both the sides of the system works, and this has been one of the way in which we can do this peacefully, because we don't need to get into anxious zone whether I should exit or not. It gives me absolute clarity what is happening on that particular date. Okay, so every month, once in a month, 1 hour, I just need to scroll through all my companies to check whether my core portfolios are in and out based on the indicator. Okay, that is how we should simplify investing. So of course I do thorough understanding and study in terms of fundamentals, but then for exit, this is the way I follow and take the exit. Yes. So Amit, thank you so much. Hope your question was answered. And by the way, guys, I don't have too much of experience in terms of entertaining on YouTube, but if you are liking this content and if you are thinking that this is a very, very practical way to think about investing, you can consider connecting with me on Twitter. My handle is @Mashrani Vivek. And if you are not subscribed to this channel, I would highly recommend, so that we can learn together and grow together inside our investing journey. Yes, so this is what I do personally. I blend technicals and fundamentals in my investing journey, and the way I do it, I call it as Technofunda Investing, right? So that is what I've been doing, and yes, that has been helping so many other community members also inside our community. Sonam Singh is asking us, Vivek sir, what do you suggest? Is it time to invest in mutual fund at current time when market goes down? So see, mutual fund ideally is a product which will give you stability. It will not give you that return as your direct portfolio. But yes, if you don't know how to invest or you don't have any idea, you should definitely invest at least through mutual funds. Now, mutual fund is a very, very vague term. There are debt mutual funds, there are gold mutual funds, there are balanced mutual funds, and there are equity mutual funds. So generally, when you mean mutual funds, I am thinking that it is equity mutual fund, right? Because that is how mutual fund industry has made it very, very popular. That mutual fund matlab equity mutual fund. There is so many other mutual funds that exist. Okay, so the point is, yeah, if you have spare cash, and you think you want to invest in equities, there is no good or bad time in terms of mutual fund, because what we can do in stock in terms of entry exit, it is slightly difficult in mutual funds. Okay, so yeah, if you have extra savings, in smaller tranches, you can keep investing. Again, consult your financial advisor so that they can give you right advice in terms of your risk profile. They can give you right advice in terms of which kind of mutual fund is suitable for you. Okay, so please just don't take it on face value what I am saying, because it's a very, very personalized thing you need to consider based on your risk profile and overall outlook which you are facing. Okay, but yes, overall there is no right or wrong time in terms of starting about equity investment, and even with a small amount also you can start doing it. Okay, awesome. Sumdeep Das again is saying, as we seen, mid cap and small cap are falling very fast and also picking as well very fast. Is that a trend? Yeah, so right now we are in a very highly volatile zone. So you are right in that assessment, but yes, that can be brutal both the sides, right? So you have to be extremely careful when you are into the volatile zone. Again, I've created a podcast on this also, like 7 strategies to ride a volatile market, like what all you should do to ride volatile market. Again, you can go to vivekmashrani.com, check my podcast, and you will get an idea. Okay, but thank you so much. I think it's a very, very relevant answer and question, and yeah, hope you got the right answer. Okay, next, let me see if there is any other questions. Yeah, so Vishwa Fabrics Private Limited, sir, can we start core company's position in weekly time frame, and once built, can we shift to monthly time frame? You can do that, or otherwise what you can do is, instead of a smaller 0.5% or 1%, you can put 2% straight away when you are initiating a position in your core portfolio, and then every month you can add 1% or 0.5% on the top of it. So within like 5 to 6 months, you can actually build a core portfolio position. So that is how you can structure and build your core position. Definitely you can do that. Okay. But yes, if it is cyclical company, like say BSC or CDSL kind of company, then you can even do end-to-end weekly time frame also. There is no problem. Okay. But monthly is generally better, because we want to compound peacefully, right? We don't want to even see our core portfolio every single week. We want to peacefully ride it. So ideally, monthly is a good time frame. But yes, if you are just wanting to start initially, you can club it and start weekly also if you want to. There is no problem. Okay. Yes, Lalit is saying, congratulations on being Amazon #1 bestseller this quarter. Please shed some light on Action Book and who will it benefit. Thank you so much, Lalit, for your wishes, and this was the intention behind this book, that how we can take it to every household when it comes to personal finance, right? So those who have not picked up the book, I'll just show you the glimpse of the book and how does it look like. So if you go to Amazon, you will see this book, Action 100 powerful principles of personal finance. And even after the launch, we have seen a very good traction. You can see it is number 7 right now in development and growth. And we have got some amazing reviews, like more than 200 people have given more than 5-star review. And you can read the reviews also. It has been amazing. So the journey is very simple. The book, what we wrote was in terms of how we can help every Indian, literally every Indian, to take charge of their personal finance. Now, there are so many books when it comes to foreign authors, Rich Dad, Poor Dad, you have Psychology of Money, Think and Grow Rich. So many books are available on personal finance and mindset. But when it comes to Indian context, there are hardly any books, very few books are available actually in the Indian context. Again, some of these books are very, very theoretical in nature. When you read, it will look like, oh boss, kitna sara finance gyan hai isme, right? It is too much taxing to even read. So what we thought was, let's make it very, very simple. Okay, let's make it very, very actionable, and let's make it very, very easy to remember. So we created this acronym called ACTION. So ACTION is actually 6 section inside the book. A is assess your income, expenses, liabilities, assets, net worth, and so on and so forth. Then you have C, again, you create a plan around financials, how you will take care of your finances. Then you have T, then you have I, you have O, which is optimize your portfolio and how to review. And then you have N, which is navigate, how will you ongoing basis monitor it, what are the tools you will track, what are the learnings you will have, what are the books you will read simultaneously. So it's like a simplified journey, actionable journey, where step by step you can implement while reading the book. Along with that, we have created 35 case studies in the Indian context, where some of them are IT engineers, some of them are businessmen, some of them are housewives. So we have created a hypothetical case studies which is very, very similar to the true life of all our Indian professionals and even housewives, right? So that you can relate it and you can actually map out on that. And apart from that, in the last page of our book, we have a QR code which takes you to a tool, which is an automatic budgeting tool, where you can actually track your budget, where you can actually plan your financial planning, and when you can actually plan your financial freedom. So it's like an end-to-end tool. Along with a digital, automated tool, you have entire playbook kind of scenario. So a lot of members, in fact, inside our community have gifted this book to their relatives. They are gifting in their, kids' birthday parties, and they are spreading the words, right? So the focus is very simple in a very super affordable way. It's a 300 rupees book, and it is published by Penguin. But I'm sure it will benefit anybody and everybody who don't have any knowledge of the finance. So I'm super excited about it, and I'm sure this is going to completely redefine the financial awareness of every household in India. Okay, so that is the whole aim about this. Superb. Thank you so much again, Lalit. Amit Shinoy is asking a question. Once out of your core portfolio, do you still track the same? Imagine page industry goes to 30,000 rupees. Won't you feel sad about it? Yeah, so absolutely. I do track these companies which are really strong companies, and I don't care where I'll get an entry point, right? So say for example, it falls over here and then again starts bouncing up. Okay, so like it again starts bouncing up and it gives me entry over here. I'll be more than happy to re-enter. Okay, so I'll re-enter and ride this further trend. For me, it is journey from point A to B. Okay, let me explain what I think about the journey. Okay, so let me take one of the example. Let's take BSc itself, right? So let's say if I'm holding BSc, for me BSc is one journey from this point to this point, and second journey is from this point to this point. Okay, it is like from A to B I have compounded, then again from B to C I have compounded. I don't care what is the underlying company, whether it is BSc or whether it is Page Industry or whether it is XYZ industry. Okay, so for me it is how I can in a most efficient way take my capital from point A to point B. Okay, this is like how you travel, right? So say for example you want to go from Mumbai to Bangalore. So you are taking a fastest car possible to go from Mumbai to Bangalore. Now suppose your car breaks down in between, and you don't get any other vehicle, and your car is not available and mechanic is not available. So what you will do, whatever vehicle you get onto that vehicle and try to cover that distance. Now you are traveling in an auto and then suddenly you get a luxury bus which is moving even faster, so you'll get out of the auto, you'll go into luxury bus and you travel into luxury bus, and then suddenly your mechanic calls that your car has got repaired and it is able to reach where your bus is. You again switch back to your car. Okay, so it is exactly what I do, that how in the fastest possible way I can take my capital from point A to point B. Vehicle is any company which is doing that. That's it. So are you getting it? So I don't feel sad or happy about it. I'm happy because I took the best decision based on the framework I created. Okay. Then the outcome is a byproduct. I don't care about the byproduct. Okay. I always refine. If I feel my system is not working and there is some incremental tweaks I need to do, yes, I do it. But then, everything else is a byproduct of the system which we are following. Okay. Dr. Ramsuk is saying, sir, आपका small case है? We don't have a small case, but yes, we do have a research offering. You can go to technofundaresearch.com and you can explore more about our product. So we are a SEBI registered RA where we have research services, and a lot of our clients are actually taking our services. Okay. Keep Going is asking, do you have two demat account for core and satellite portfolio investment? Absolutely yes. So I have a ICICI account for my core portfolio and I have a Zerodha account for my satellite portfolio. In my HUF, I also have a HDFC Securities account for my core and again, Zerodha in satellite. So that gives me a lot of clarity in terms of what I'm doing with which side of the portfolio, and also unnecessarily it doesn't churn because ICICI and HDFC, they are slightly higher brokerage, Zerodha is free, so that way, that is also like a blockage when I want to do it frequently. So that prevents me to do too many frequent entry and exits. Okay. Sridhar is saying, what's your view on monthly SIP on core portfolio? Yes, absolutely, you can do it. Easiest way to do it is, you just follow the Shaktiman kind of indicator. You create any system which is there. So say for example, I want to add, again, like an example I'm taking, say Varun Beverages Limited is like a core kind of company. Okay. So what I'll do is whenever it makes a new high, okay, I'll keep adding it. So say for example, I entered here. Now whenever this orange, dot happens or this flag happens, I'll add. So I'll probably add here, I'll 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 add here, and so on and so forth. I'll not add when it is in consolidation, okay? Because again, I want my capital to be, fastest in terms of compounding. So whenever these flags happens and it is on the right track in terms of compounding, I'll keep adding it. So this is how I kind of do monthly SIP in terms of core stocks. And you can also do it, like it's not a rocket science. Until it triggers the exit. So say for example, if it is like a Page Industries kind of situation, okay. So if this is the situation and if the exit triggers, you basically then exit. So you might have entered here, added few positions in between, but then it reverses, then you need to take a exit call also. That is how I do it. Again, you can do as you wish in terms of your strategy, but this is what is working for me. Okay. Awesome. Thank you so much again for asking that question. Khushbu Kumari is saying, sir, आपकी course Hindi में है. We have more like a community where course is one of the part, but then there are a lot of other elements and we learn together. But yes, so far we have in English only, but English is so simplified that anybody can actually, like even a basic English, if you know, you will be able to digest it. But yeah, I don't have so much of bandwidth because my main focus is in my investing, and it takes a lot of time to research new companies, and always, we are active on that side. So that is what has been the case, right? So literally I've not got too much of time to record Hindi videos as such. Okay. Gagan M is saying, does that BSc example means that ultimately all portfolio are satellite, it's only the time period that matters, at point we need to exit? Yes and no both, right? So everything in the world is cyclical. Okay, so you need to remember that nothing is permanent or nothing keeps going up always. Some companies can go up for 10 years, some can go up for 20 years, some can go up for 5 years, some can go up for 2 years and then dwindle, right? So ultimately, the truth of the entire world is cyclicity, right? The interest rates have cycles, GDP have cycles, economies have cycles, and so do industries also have cycles. But some companies have faster cycle, some companies have longer cycle. Okay, so ultimately, until that cyclicity doesn't kick in, I will keep riding it. Okay, so it may happen that for 5-10 years also I might not get exit, and then ultimately that company stops growing or there is lesser chance for that to grow. It will come down, or there is a derating that happens and it can come down, right? But yeah, to answer your question, ultimately, yes, everything is cyclical. In fact, in my first book, You Can Compound, there is entire one chapter I've written on everything is cyclical. And you read Warren Buffett, you read Howard Marks, you read Peter Lynch, everybody has emphasized on this. Sometimes, in terms of buy and hold, we forget that there is an element of cyclicity. And most companies are more cyclical than what we think about. Okay, so yes, you need to respect your cyclicity, and if that cycle again turns, you can always re-enter. That's the whole thing. You are not a promoter that you cannot enter 70% of stake again. You have a tiny stake, you can always buy once in a while, again you can re-enter when the cycle turns in your favor, right? So that is always the case. Superb. So probably we'll take 2-3 more questions, and thank you for asking all these amazing questions. I'm super happy that all of you are thinking in the right direction. And yeah, if you are enjoying this video, hit a thumbs up again so that I know that even after 53 minutes of this session, you are still game on inside the session and you are not got tired yet. Okay, so let me take 2 more questions. And I'm super energetic when I answer all your questions. It's so amazing feeling. I cannot describe in words. Yes, so Lalit is asking, please explain HUF and will it help a widower person? I'm not sure about widower. If you can open a HUF account, Lalit, I'm not too much of tax expert, but I would recommend you to consult a tax expert. Basically, HUF is like a Hindu undivided family, where as a family, if you are married, you can create a separate PAN card after submitting the deed, and that works like a virtual entity. But for a widower person, I'm not sure if you can do it. Okay, so you need to consult your tax advisor for that to get a right answer. Yes, is there any web page where one can access all links of Technofunda? Yes, so you can go to technofunda.co/connect. Okay, I'll just share with you the link also, where most of these links should be available. Okay. So it is called technofunda.co/connect. Okay, just go to this link. Yes, so let me take one more last question for today, which is from Shubham Singh. Shubham Singh is saying how to stay focused when so many stocks are breaking out technically and running, as we only have limited funds, which is a very good question, and I'm sure a lot of investors might be facing this. So what I do personally and what we do inside our community also is this. Okay, so what we do is every single week, okay, I basically prepare a list of all the stocks which are potential in terms of breakouts or price volume action, or basically this is my watch list. And then I sit and categorize it, okay, that what are some of the stocks which can be played in weekly. Then what are the stocks which I cannot enter because the risk is too high, but if I'm holding, I can keep riding it. Okay, so that is my orange list. I flag it like orange. And this is like a recent list, only day before yesterday I created. And then something which is very strong, which is not falling even in the falling market condition. This is more like a 2-study list. And something where bases are broken, something where volatility is too much, something where the right setup is not there, I might make it as ignore. So right now the list is small because the market condition is not favorable, but ultimately you get like around 10 to 15 companies in this list. And from these 10 to 15 companies, I further filter based on different criteria I have for ranking, whether the base is very smooth or not, whether multiple time frame the check is happening. So whether my daily, weekly, monthly, all the time frame it's suitable, whether the volume is picking up nicely, whether that sector is also in a tailwind, whether there are some very strong earning growth trigger fundamentally that is also helping the company. So I basically stack my probability, and if many criterias are meeting, these are the higher probability candidates versus other. And if I have capital, then top 2 or 3 picks I take it in my portfolio and then write it. But sometimes if you are full, like it happened a couple of months back, I think in December month, first half or January, I was like pretty much full inside my satellite portfolio. I was fully allocated. And that time you just need to keep tracking it. But then, it is okay. You don't need to keep taking position if something is working for you in your favor. Okay. So then it's okay to just sit and relax. That is all. No action is also an action basically. Okay. Awesome. So thank you so much again, guys. We have been discussing very nicely for almost an hour. It has been awesome. I'll do this more frequently so that I can help you more and more in your investing journey, and we can stay connected. But it was lovely connecting with each one of you despite being a Monday evening. You are there. So thank you so much to each and every one of you. Hope this 1 hour of interaction was very useful to all of you. Thank you so much, guys. Take care and Jai Hind.